it's shrouded in a lot of technical language, but the truth is that people are going to suffer. People are going to suffer a lot.
But why did they not discuss this with the institutions for institutions to get back to their customers, for them to understand first before an announcement was made?
The institutions had 2 meetings. I remember there was the week we discussed the AGI thing. The institutions had met the president, but that was prior to the budget.
Yes, I remember the meeting.
This particular meeting that happened was to tell them what they were going to do. So they didn't. So 2 things. I don't think the institutions were the ones who led this process.
Why?
Because the people who are insisting that this should be done would obviously be the IMF. And the considerations for doing it and the thresholds that have been set, for example, having to get to a debt to GDP of 55 by 2028 requires certain trade-offs. Now, if you ask banks or investment companies to lead it, I suspect they would say more of the cuts should come from the fiscal deficit side.
Yes.
The government should reduce its expenditure.
Yeah.
The government should stop free SHS. The government should stop free school feeding, in addition to then deferring some of its debts to them. So I believe that the government, and I'm speculating at this point.
Yes.
I think they did not, because
we can make educated assumptions.
Yeah, because the institutions are all very surprised. All the sources I've spoken to in the institutions are very unhappy and very surprised by this.
Which is my concern, because in doing this, you require buy-in, you require these institutions to be partners to this. Now, they would also find ways of informing those who are the most affected, customers.
You see, so there, I mean, there's also the risk of possible leaks coming in, so that if it hits the customer space, even before processes are announced to deal with it, it might also create its own problem for the financial sector.
This is a problem. They didn't tell the institutions 2 things. If they had said, let's come up with a plan, if they had said, come up with a plan as industry so that we discuss it, come up with a proposal, or they could say, this is my proposal. I'm going to do
A, B, C, D.
I'm going to put all these things together into four different instruments, 17, 25, 41, paying you in this year, 2020, whatever. What is your alternative? That's different. But this one, I just told them this is what we are doing. Take it or leave it. In fact, you can't even leave it. You have to take it.
Take it.
Now, what that does for me is very serious, because it you see, when you learn any investment, anything, you are told that lending to government is the safest.
It's secure.
In fact, after the financial crisis of 2018, all of that banking crisis and all those things, a lot of these...
You mean in Ghana?
Yes, a lot of the collective investment schemes, fund management companies, mutual funds, they moved their monies into government of Ghana instruments.
Yes.
So, for example, in the past, they would diversify and go and give some money to some savings and loan company, some finance house, to some real estate agent. They realized that because of all that challenge, they were just going to buy government of Ghana paper. So a lot of them started
those ones were safe,
boasting that they were safe and they were going to protect your money, because the theory is that the government is safe.
Yeah, because, government is a continuum. No matter how long it takes, they will pay your money.
And now the government is not only... government says, I don't want to default, so I'm going to pay you on my own terms. Now, I don't know whether the government has thought about what that will mean for about 5 critical sectors. So for me, it's 2 things. Government is saying, I want to get an IMF program, because if I don't get an IMF program, I am screwed. If I don't get an IMF program, I don't know where I'm going to get any money from. The market will not accept us in years. The currency is going to plummet. Interest rates will keep going higher. We will not have money to even pay salaries. So if I don't go for an IMF program now, all of us will suffer. So some people should suffer, and let's spread the suffering so that we all don't die. That's what he's saying. That's basically in English what the man is saying. But my point is that has he thought about what this all of us should take some of the hit means? Because if you look at it objectively, for example, he said individual investors will not be affected. That's really a red herring.
That's strange, yeah.
Because you and I cannot go to the primary market to
go for money
unless we have a lot of money, and then we register with the Central Securities Depository. Only institutions
have that.
Are primary lenders to government. All of us are part of collective investment schemes like the data bank,
and all those things.
fund and those things. And we are like 130,000 people in one fund, and they manage our money to us. So all of us will lose. If you have money, maybe your father is a rich man and you have millions of dollars, then you can register and then go and buy government bond directly and lend to government directly. But few people do that. So when you say individual, people are not going to be affected, it actually obfuscates the matter. It's making it look as if the individual, as in you, Godfred, who went to buy that mutual fund will not be affected. But that's not the case. Yeah. They're basically individual investors. That's the first problem. Now, they are... Okay, you wanted that?
No, I just want to... Because as I listened to the government communication, my mind kept taking me back there.
So these individuals will not be affected?
What do you mean by individual? Because I kept asking myself the same question. How many people can directly interface with government at that level? So a lot of us go through, like you said, the M-Fund, Data Bank, EDC, that kind of thing.
The information is misleading.
You know,
so an individual, in the case of what Ken said, is a natural person registered at the CSD with a CSD number. When the law says a natural person, so you are a natural person, a company is a corporate person. So if Godfred is a registered person at CSD, that's why we have a secondary market. So we play in the secondary market. So the people who can deal with the primary market are the SNITs of this world, Bank of Ghana, and the large banks. And then these CRSs and other companies go and buy and resell in the secondary market. So if you want to exit a collective investment scheme, you go and sell. Let's not complicate the issue. The point we're making is that there is going to be a lot of pain for some very vulnerable people. And I can explain that. So, for example, by law, 70% or so of funds available to pension companies must be invested in Government of Ghana instruments. So whether you are Axis Pensions or Petra or whatever, by law, you have to buy Government of Ghana. You have to lend some of that money to government. Okay, so you are working here. We pay you SNIT, tier 1, tier 2. Some of it is managed by some other companies. They have to work with that money so that when you are an old man, you have money to pay your pension. Okay. Now, if you are...
Pay me pension.
Yeah, pension. So now, if you are 57, 58, 59, 60, 62, and or like a sizable chunk of your pension is with your pension company. Now, that pension company may have bought, has bought Government of Ghana bonds.
Because it is mandated by law to do so.
Good. Now, if your retirement is due and you require money to be paid, now, if the government is going to treat that pension company's investment of your pension that they went to buy Government of Ghana bond, like the way they've described it, it means that that money, they won't get any interest on it 2023. In fact, they won't get the money back. The earliest will get the money back is 2026, based on what has been described. Because they are saying that the principal, they will pay it prior to 2027 in two chunks of 50-50. The interest itself will be 5% for the first one, then 10%. So by the time they start paying the money, that pensioner may be dead. Unless there is an alternative arrangement to make money available for the pension company to pay, whilst that thing is going to happen. So do you get my point?
I get it.
So then the pension is not, it's not as if the pension company decided on their own to make that. This is what the law asked them to do.
Yeah, that's
so
right.
The law has asked us our pensions be given to you to make it available for us. That's why the health service workers say they won't agree.
That's right.
So, and if you talk about vulnerability, pensioners are very vulnerable.
Yeah.
Okay, so that's one. I've never come to the banks. And number two, insurance companies. So the basic way an insurance company works is that they price risk. Okay, so insurance company will say Nathan Carr has a Jaguar, and we'll give him this. Basically, he pays a premium, and we say that if he crashes the Jaguar, we'll buy the Jaguar back for him.
Or a certain percentage.
Now that industry in Ghana, inevitably, they don't price the risk well. So that's why you hear fire at some company in North Industrial Area, fire here. So a lot of times, the insurance companies invest some of their monies that they used to pay these claims in Government of Ghana instruments. So they can make some extra money on it. So that even if they lose on the underwriting side, so because three people have an accident at the same time, all of them are making claims, they don't have money. Because the insurance company has gone to save that money or invest that money or lend that money to the government,
they can fall on it.
They can fall on that. So they usually get some of that income from there to offset the losses they make here. So once you say you are not going to make the payments, or you are going to make the payments based on your own terms, you've thrown the business model of the insurance company
out of gear.
So some of the life companies may not have money to pay you when a death occurs, because the money that they will use to pay you has been invested in this
Government
of Ghana instruments.
So
which
insurance
is attracting
as an industry, particularly life insurance, is also going to suffer if I'm always saying if some arrangement is not made to ensure they have their liquidity. That's number two. The worst one is the banks. You know, around June, when they started releasing their financials, the research desk of Citi started analyzing the financial statement of banks. And we noticed a very worrying trend. We noticed that more and more banks were lending to less and less people.
And more to government.
They were just
buying government instruments.
For security reasons, I don't think, if I'm not going to mention the name of the bank, but I'm going to give you some big banks in Ghana. I'll look at their interest income. Now, interest income is the main way banks make money. Okay? They usually do that through loans to other banks, loans to customers, and then they invest in investment securities and other interest income. Okay? For almost all the major banks, advances to customers as a percentage of interest income is reducing. So they're not lending money to Sky, they're not lending money to you. They are buying government of Ghana instruments. All right? For some of the banks, for example, a major bank I have in front of me here, based on the financial we looked at, their investment in securities rose from 11% to about 46% from 2019 to 2020.
11
to 46%.
That's
Another bank,
huge.
their interest income percentage, it increased. So loans and advances to customers reduced from 61% to 35% from 2018 to 2021.
How?
Investment in securities increased from about 35% to about 63%. So 63% of this bank's income is from what they've invested in government. And I'll explain what that means for the bank later on. I'll give you another bank. I'll not mention the name because people may not use the information properly, but this is another bank in the country.
But also
interest income from 2018, the percentage that came from investments in securities rose from about 48% to 61%, right? Whilst loans and advances to customers reduced from 40% to 31%. So all their interest income is coming from money they
given to government.
Another bank here, again, securities increased from 45% to 80%.
45 to 80%.
Between 2018 and 2021. Loans and advances to customers reduced from 43 to 18. Another bank in Ghana. So what am I saying? So what this means is that if a bank's main income is from investment in securities,
government securities,
once the government announces such a thing, two things will happen. For some of the banks, this interest income goes straight to capital. But the finance minister says, no worry, there will be, they call it regulatory forbearance. We may ease up on some of the requirements for your capital. So they may say, even though you need 400 million cedis or dollars for capital
requirement,
because some of your interest income goes into your capital, and because we are not going to pay, we can reduce that to 250, or we can say for the next 5 years, the capital requirement for the bank may be lower. So they may do that. But the problem though is that some of the banks, their interest income is their money, the liquidity that they use for demand deposits and for fixed income. So if the bank's liquidity, so you need your money, you need to build a house, you need 50,000 now. Some of the interest income they get, what they used to do that.
To pay me.
So even though on the capital side, the banks may be okay, on the liquidity side, they may have problems. Do you understand my point? So, and I can say on average, over 50% of our banks have their interest income in government securities. So you can say about half of the income of banks may be impaired if now the government announced that they are going to do some
stabilization fund.
Financial stabilization.
Good. Fall on external institutions to give them some funding.
The announcement is okay, but you just have to go back to history and ask yourself, and I'm just asking.
Yeah, there was this amalgamation.
Ghana amalgamated. So when the first financial sector crisis was done, thing was done in 2017, they set up something they called the Ghana Amalgamated Mutual Fund to raise money to pay people whose money had been lost to Gold Coast and things. They should tell us how much money that has raised to give us a sense that this new fund that they announced will also work. Because if you say this thing was being run, this Ghana amalgamated thing, it's public knowledge. They can check. they should let us know how much was raised by that. If we know, then we can say, okay, based on the history of that, they will also use this new system to create some buffers for liquidity for the banks. The truth is that the banks may face a liquidity challenge if they don't move, if the government doesn't move quickly with its partners to provide this liquidity through this instrument that they say. So the banks could also be in trouble. And that's not all.
Okay, the investment companies.
Good. Now, investment companies, usually, you and I don't have too much money. So we go together and band into what is called a collective investment scheme. So they use the expertise to decide whether it's a money market or whether it's a mixed whatever, where they will buy some shares here, they will buy something here. So for some of the companies, like almost 150,000 people have put their money together into a collective investment scheme. And then the institution, whether it's Data Bank or EDC or Stanbic or whatever, they will buy different mix of things for you. Now, some people put their current running, like some companies invest in those things. So a company may have all its salaries and things, they buy that thing, and then every now and again they go and remove some of it. Now, if you are saying you're not going to make any interest payments until 2025, and you're not going to make any principal payments until 2026, the question is, for individuals who have put their money in that, for some it may be school fees that they want to pay. Maybe like a parent is dead, they put some money into that thing, they use it to pay school fees, or a company uses it to pay salaries or whatever. You get that access to that money. So it's almost back to square one. The issue that happened with the fund management companies under the first financial tech cleanup, people who may genuinely need their money may not have access to it.
Their money.
You see, so the thing is pebre. And I feel that the Ministry of Finance needs to clarify many things. So, for example, when you say, Tio Champion put out some very nice things, said the government said the only T-bills are not affected. But there are different, there are treasury bonds and there are treasury bills. They have to clarify those distinctions. Okay. And then the individual thing, I think they have to clarify it, even though I think I understand it, I'm not sure. So there are treasury notes, so there are treasury bills, there are treasury notes, which are 2 to 10 years, and then there are treasury bonds. So the assumption is that treasury bills are excluded, but treasury notes and treasury bonds are not. We need that clarity. When they say individual investors, what do they mean? Again, for the collective investment schemes, they are saying they will come up with some fund to support them. What are the details of that fund? Okay. Then the other question is, how much hit is the government itself taking? Because you are saying that people who have lent you money, you pay them now because you want an IMF program. But what substantially are you doing to also show that you are also committed? Do you understand?
Yeah.
And I'm not sure I have enough information on that. Apart from the 30% salary reduction, no V8 thing.
Matter. I mean, clearly, as for that one, they